This conference will now be recorded.
Hi everyone, it's Patrick from the Adamus Principle. It's the 25th of November. We're running a little bit late and we had a few technical issues my end. So, but Beat's in the house. I'm glad to see you, Beat.
Hi,
Need you.
Patrick. How are you?
I'm very well. We need some stability in this crazy markets, in this world of crazy market. We need, a sure pair of hands. And don't
Yeah.
look at me. I don't know what I'm doing. So we're all looking at you, mate.
Yeah, thanks.
So we've got lots to talk about, and we were just talking offline about, which dog has the most fleas, I guess. The the Europeans or the US, in the sense of hiking and all this stuff. So before all that, I want to just, because there's a big meeting in Buenos Aires. Some of you may have heard about it, but it's the Trump Z meeting. It's the G20, and it's probably on Saturday. Lots to talk about on this, and I just want to kind of bring all the followers up to speed on where I'm at. Obviously, Trump's playing hardball. Pence is up there with him, and lots of talk of this being into the new cold trade war. I've seen a lot of evidence to support this. I don't see that changing long term. I think the trade relationship, has gone down a path, and I don't think we're coming back from that. But this certainly last week, picking up some bits and bobs, Pence has been, he could be the bad guy because he's still on that kind of rhetoric. Trump's been quite complimentary, and if you read, there's some things I've been picking up. He's got a cautious optimism, and he did a press conference on Thursday on Channel News Asia, basically just saying he has a great relationship with, the Chinese Z. Larry Kudlow positive. He was on Politico. The Ultra Hawk, which I think for me is more interesting. Peter Navarro, who wrote Death by China, or had that video out. He's not attending the dinner. So here we are. This is it's going to be the big one. My personal view is I think it will be window dressing. I was in Core Finance on Friday. I just said it to those guys. It's going to be window dressing enough to support the Santa rally in risk. Devil's in the detail, but I think they'll cobble something just to please people. I don't think there'll be much to it. That's just my gut feeling. Or what do you think, Pete? What's your take?
It's a tough one. I mean, first of all, structurally, I agree there will be no real breakthrough in a week's time. And with that, I mean something that solves all the issues and is suddenly putting the US and China back on track. I think they will not come back from that anytime soon. Whether they make some early concessions on some of the topics, some of the smaller areas possible, but I think the overall problem is really a deep-rooted one, which I just cannot see end as long as Trump or any sort of hawk is president. I think this sort of America first, bring jobs home. We've been too good to the people abroad for too long. I think that's not going to go away. I think his game plan about starting to bring jobs back, stop that people take advantage of the US. That's very deep rooted, and I think that is his policy. What he's trying to achieve in a week's time, I think he definitely don't want to be the bad guy, which means that's where I think is all the positive talk is coming from. And at the end, You know, I still have one cynical view: is the Chinese have to blink. If they don't blink, there's no deal. You know, I just cannot see that Trump suddenly, you know, Chinese have nothing to offer. Maybe the Chinese offer something, but I'm really not sure. The one thing I don't believe is that we see a massive rally in equities, even on a deal or some sort of a win, you know, like whatever, one or two sort of concessions and it's sold as a deal. I don't believe 1 minute in a center rally personally. We don't really have sold stocks for a trade war. You know, I can't remember us having had a bad day on the equities, bar maybe one day where trade was actually the topic. Of course, you can argue trade is in the background and may lead to some of these poor results or whatever. But I just think I'm just a structural bear. You know, I think the reason the Fed is less hawkish is not the inflation side of things. It's actually the growth angle. You know, global growth slowdown. We get more and more disappointing data in the Eurozone. Global growth is a question mark. US data, you know, started not, you know, we haven't had upside surprising in US data in a long time. If anything, they start to look a little bit mediocre. No, not bad, but kind of, you know, plateauing out. So to me, the way the Fed has changed the language, if it gets confirmed this week by Powell, is really concern, not, you know, not concern that we like sort of going into a nosedive, but maybe rates are not far away from where they should be if the economy starts to just, you know, run out of steam a little bit. And so that's why, for me, if global growth is a concern, and I think the stock market surprisingly got that right so far, that we haven't rallied on the back of lower yields. You know, if you look at 10 years below 305, it's down 20 basis points. Basically, the 325 is what had us also worried on the equity market. So the equity market, if it just worried on rate, should be a lot higher, shouldn't be here. So I think the market understands that maybe we have reached a point where we just consolidate, we go lower. You know, it doesn't mean like stocks have to collapse, but I wouldn't be surprised stocks just continue to be a sell on rallies and drive down. Maybe a quick rally on some sort of whatever window dressing deal they do in a week's time. You know, 300 plus, 400 plus on the down, that's it. I really don't see a Santa rally, and I don't see a continued strength in the equity market. I just not sure where it should come from. On the flip side, what still amazes me is that the Chinese officials continue to talk down the economy. You know, every week you read various headlines from Chinese officials that warn of continued problems in the Chinese economy, still downside risk, blah, blah, blah. It's very unusual because you know, they used to come out for the last 20 years with 7% GDP, then they've gone to 6.8, then they go to 6.5. And for them to actually admit there is a problem is a little bit surprising, in my opinion. So, no, I can't, you know, no matter what they discuss next week, I can't see equities moving up into the year end. But that's just my cynical view, that I don't think it's the trade war that keeps stocks under pressure. I really think it's fundamental, structural peak.
There was Tan from Goldman's on that Bloomberg piece. He did mention China wanting to deleverage, and using that kind of slight shift in tone as well. But I guess my question to you, B, is I've read a few places there talk of a ceasefire. Now, what that means to me is putting everything on hold until they have a proper sit down. So let's just put the scenario to you. Jay Powell on Wednesday's dovish, or he confirms what was already hinted at with clear reader and Jay Powell last week, and what M&I kind of confirmed on pausing in March. We know the dots are well out of date, so they were in September. 3-4 hikes well out of date. Current, well, when I last looked, it was 2 hikes in 2019, and the December was still around 80%.
Yeah.
Now it's 1 hike i.e. the curve. Dollar spot hasn't moved really, but I just think if you got a ceasefire and you got JP being dovish, do you think we could get some move on in one in risk and two in the dollar?
It's a very good question, to be honest. I think, last week I felt there's a lot of 50-50 trades out there, other than I'm still trying to stick to this Aussie yen, Euro yen axis. On the flip side, we have, like what we discussed quickly offline, is we have European data that just starts to look like, yes, maybe the ECB does follow through on end of QE, but reality is data continues weaker, way more than just a consolidation from the stronger growth early in the year. CPI, even though M&I mentioned on Friday that there might be an upward revision on CPI, we just had a 40% move in oil on the downside. So I just can't see how CPI can be a problem. The problem in the dollar right now, like we said, why does the market have 2 hikes and the Fed has 4 hikes and the dollar hasn't reacted? It's just this conundrum of big stories, right? We have Brexit, we have Italy, we have weaker European data. So the market just doesn't want to embrace the euro at this point in time, I think. And so the dollar survives by default. And we're going to have this. That's the thing, we talked about it last week. We have 2 big stories, and you may have to tiptoe around them. One day it's going to be the Fed, and the next day it's the ECB. But net, my worry is that what happens between ECB and the Fed is putting the euro into a range again for the next few months. Whether it's 112, 116, or 113, whatever it's going to be, but it's not going to be below 110. It's not going to be above 120 because none of the stories kind of adding up, right? At least at the very moment. The risk side, like we discussed quickly earlier, if you look at the dollar against emerging markets, so there we had, from the word go, when Fed's Clarida spoke, dollar EM has come off ever since. And so there we do see the dollar move. The dollar move just seems not to be able to sneak into the G10 market, but it would be wrong to say we didn't see any. So the whole pressure we had on the EM side, at least the one that has come from a hawkish Fed, seems to have removed itself. Dollar rand is down to 1380. That comes from 1430, 1450, and so on and so forth. Dollar Turkey is down to 528 from like the 550s, 560s. So we had some decent move away from the dollars that the market is watching predominantly. But I think that's because the story in G10 is continue to be screwed up in terms of none of the factors can settle. We had the brief move up in the euro on the back of Clarida a week ago. Euro rallied like 150, 120, 130 points. And we run straight into all this Brexit garbage, Italy, spreads widening, and that just killed the rally again. So I think the market just doesn't, at this point, want to embrace the euro. And so the dollar is surviving by default. Risk, I don't know. Euro is heavy. Dollar yen doesn't move. It puts a natural cap on euro yen, which is basically the chart that I liked the most last week for a bigger break on the downside in euro yen. Euro yen has ranged for like 10 days in a very narrow range, which is very unusual for a volatile pair. And that's, to me, the pressure is just building. The one thing I don't know, and maybe I just get lucky by default, like I did get lucky in the last few weeks, where I've been short either euro yen or Aussie yen or both, and actually risk sold off for one was the RAP resignation, the other one was the whole Brexit story, and maybe this one is the same. Maybe the euro just really has a leg down and takes all the crosses with it. I'm just structurally bearish risk. That makes it very hard for me to, think how much is this story going to rally or that story going to rally. I don't think, as we've seen so far, the dovish Fed has had zero reaction on equities. It's not created So from a price action point of view in stocks, I just didn't see it. Even when we had these sort of positive messages for the G20, for the Trump meet with China, you know, we had a brief rally and it just died, you know. So it just seems like sellers are just lining up on every rally. And from what I hear is it's more of the institutional sellers, and the dip buys are rather weekends. You know, that's not from me, that's from people I've spoken to. So if that's true,
Yeah.
the only thing then the bull could argue, you know, the big pressure on equities comes from the heavyweights like the Apples of this world. They have come off a lot. So yes, you know, if they start to bottom out a little bit, maybe we hold. I just, you know, I can't really explain it. I have this picture for the last 2 months in equities, and I just see nothing why I should be really changing the picture. And so the risk crosses for me, not so much the dollar axis right now, like dollar rands or the EM side of it, but more the traditional ones like Aussie yen, Euro yen, Canada yen. You know, whatever you look at, to me, it just looks like it looks as if it wants to roll over, and I just can't see, you know, what has to. So the trade war is not going to be over in a week's time. You know, everyone who has that hope is you know, Trump is not going to redo, you know, all the tariffs he introduced. They're not going to. Maybe they say, okay, we're not increasing. I think there's some tariffs planned for 2019. Maybe they go like, you know, okay, let's put a timeout, as you said, a ceasefire on it. We don't introduce new tariffs. What's in there is in there and stays in there. And now there's a lot of talk, and that's why I don't get the positive news. There was this big story about Huawei, what's their name, Huawei or whatever, that Chinese mobile
Yes.
company. Where the US asked all their allies to start boycotting that company. I mean, that's almost like declaration of war in an economic sense. And on the flip side, we expect a big breakthrough on trade. I just, you know, I struggle to see it. But as so often in politics, like we both, you know, talked about Brexit a week ago, it's just hard to predict. You know, there's a poker play going on. The Chinese don't like to lose their face, so how much they're going to blink, I doubt. So I just struggle to see it. I really do. And I have to see it with my own eyes, that I see a bounce that can, until then, I stay cynically bearish. And I don't believe in a Santa rally one little moment.
Well, that's fantastic. I mean, you know, as ever, I always say to my students, you don't have to know the outcomes, you just have to play the probabilities. And sometimes it's okay not to know. Sometimes the waters are very muddy. I mean, I don't think I've been in my whole career where there's so many really heavyweight political, geopolitical, and macro themes all at the same time going on.
I agree.
It's,
and the problem, like you said, at the moment is, you know, we just try to focus on the Fed story. And like a few days later, we like, okay, spreads in Italy, Bund BTP has now calmed down again. But literally on that day when the euro tried to head towards 115, you know, Italy spreads blow out. And it just seems every time one theme tries to settle, another one is coming in. And let's face it, Brexit is still, you know, yes, we got that summit, and I'd be interested to see whether they try to take sterling higher for that EU agreement on the bill. But reality is, you know, if you listen to all the politicians in the UK, it sounds like Parliament is not really going to back it, right? I don't know. It's another, you know, we don't know, right? It's hard to see how people vote at the end with what is at stake. I think the one thing I'm just a little bit concerned for us now on the trading side. Usually after Thanksgiving, you get the sort of move into year end, whatever kind of move it's going to be. But this time, you know, if the vote in Parliament doesn't happen for another 3 weeks in the UK, so you have a lot of risk factors into the more illiquid time of the year, and I just wonder whether people go like, you know what, it's 11 months gone. I can only lose my year and just start to withdraw, and that is a risk that the market might suddenly decide, what, we start again in January, and I have no idea what that really means. Do we fall asleep in these ranges? Does it mean it gets illiquid and we have like some nasty moves into year end? As you say, I see a lot of 50-50s. The reason I keep the risk I have is because they kind of work and continue to work. So as long as they work, and as long as I don't see a story that worries me, there's no reason to change. My newest trade is short dollar yen. No idea how that's gonna work. That was just the same work I'd done on the Aussie early in the year, where I say all the roads would lead to lower dollar yen, lower US yields, less hawkish Fed.
Yeah, it all makes sense, doesn't it?
But it doesn't move, so it's not a lot of help, is it?
Doesn't move, it doesn't move.
No.
I think so. Are you? I mean, I said in my LinkedIn topic blog, buy the rumor if you dare on the G20 meeting. I don't. I like selling the facts. That's what I've always done in my career as a trader. I don't like buying rumors unless I'm really quick. But I want to see what Asia does tonight and London does tomorrow morning, just to, not that that's going to tell me the complete picture, but it will just be interesting to know. And I say that with risk in mind. So let's just see. We had a long weekend from the States, and so by the time lunchtime, US will be waking up around 11:30, 12. Let's just see what they have to say, and that, because I'm still kind of thinking, there'll be a lot of people out there who will want a Santa rally. That's the only thing, and I've tried to fade Santa rallies quite a lot, and I had something given to me, and it wasn't very nice. So that's the only thing. But let's just see. I mean, anything can happen. I mean, it really is like so many 50-50s, as you say. But what was old news is, I mean, we've both been quite nimble and stuff about where to hang our hats certainly in the last month. Who knows what's going to happen?
Yeah, I think you just can't call it right now, and I just think it's really to be, know the key stories, and maybe we just have to change the order every day or every second day. Fed on top, ECB on top, risk on, risk off. It's just gonna be a little bit messy, and I think maybe chip and charge, in December, maybe the better idea than to look. But again, even that I don't know yet. If it stays like this, I might just go back to chip and charge for December, and I just can't see any follow through. But I haven't given up yet that we get a real shoeing in euro yen or something. A proper one, but maybe it's just wishful thinking.
Well, I've been certainly one. Sometimes I've let me see. I've wanted it too much, and I've tried to fit. I'm not saying you do this, but I've done this in my, I'm a victim of doing. If I want something to happen, I'll find the evidence to support my trade idea, which I'm slowly getting better at that. But it's certainly my first 3 or 4 years as a trader. That's what I tend to
try it the other way around, to be honest.
Yeah, it's good.
Work, but
good.
I can fiddle with the charts if I need to, but
yeah, it's all in the price, isn't it? So I've got the next topic is CPI, PC. I think it's a bit of a sideshow. It's for me, it's all about yeah, PC is obviously important to the Fed's metric, preferred metric, but CPI, it's all about core. Core hasn't really tanked. I mean, oil's come off like majorly, and that's all strapped into the headline. So I just see it as a bit of a sideshow. I don't know if you have any quick thoughts on that.
To be honest, one thing I would say is we should move away from, move away from CPI, not as in ignoring it, but we have to start adding the real data. It's, in my opinion, the first data-dependent Fed, the true data-dependent Fed, after Yellen always claimed to be and Bernanke always claimed to be, but they never were. They always had an the S&P cash in mind at some point. I think Powell, the current Fed, is data-dependent. So that means now that they start to be less hawkish, we have to start watching all the core tier one data. I think we have to have less weight on CPI and more weight on the actual tier one data. I think that is our job from here on, to actually start to understand whether this whole story about a pause as early as spring is actually really there or not. So the moment we start to see data surprises coming back in, the Fed, I think like Powell said, next year we're going to have a live, every meeting is live. So that means they don't have to communicate the same way they had to before, where we go like, okay, that meeting is a non-event meeting, the next one is a rate hike meeting. Suddenly we have like every meeting is live. So they are a lot more flexible to adopt, even though he talks about they want to be even more transparent. I start to think they try to drop forward guidance to some extent, or at least I hope so, they really do, where they just communicate enough, because every meeting is live, that they don't need to tell us anymore, okay, we're gonna hike in January 2020 or whatever, right? But maybe that is the part of how they change, and that's why I think, but bottom line is we should move away from only focusing on wages and CPI. I think it's time to look at the core data from now on.
Okay, well, that's all good. I mean, I sometimes look at real GDP and real yields, as opposed to nominal yields, and they're doing okay, I think. Last time I looked was a couple of weeks ago, but it's just getting the real data and the core data, as you say, is very important. And it's a really good point. Really, really good point.
We're going to soon find out what the real data is. The market will start to focus, whether it's all of them or start to pick out a few. But I definitely think like if we continue watch CPI, we're going to be very disappointed, because you know what, the next one is not going to overshoot on the top side. We've been waiting for that for the last 3 CPIs, and it never happened. And it's very hard to see it happen now. And so that's why I think we try to get evidence to see whether where the Fed is in terms of data, and if the data continues to just sort of be there or thereabout, yes, maybe there is no need to continue aggressively hiking rates, but who knows? But I definitely think it's less clear, because Powell is gonna really watch data like we do, which is actually a neat thing for us, because that means like we all more or less a little bit on the same kind of page. We all watch the sort of same data and come out with our conclusion, rather with it just seems like Powell doesn't want to pre-commit anymore. That's what I feel.
He in that interview, I think it was the Dallas Fed. It's interesting because there was a couple of bits. He talks about this whole neutral rate at around 3%, 2.75, 3% is not finite. It's just a kind of a rough measurement, which is kind of common sense, really. And the other thing I quite liked is I do actually quite like him, And one thing he says is, when you're a central banker, there's this concept where you're in a room full of furniture, and sometimes someone turns the light off. So what do? You slow down so you don't
yeah,
get hurt.
yeah,
And he said that, and
yeah,
it kind of thinks, okay, all right, I get that, I accept it. So it's almost like some of the stuff they do is so lagging, that
yeah,
so and it takes the time to kick in and stuff like that. So, from the tone shift, I think there's definitely something in that.
yeah, I agree.
Good stuff. So the final, I've got two subjects quickly, but Brexit. I guess for me, the leader. I caught. There's a guy called Manisha. I think he used to work with Nat. He's a forwards guy, but he's just talking about concentrating on the leadership challenge, which is great. But personally, I don't think that's that important, and I'll tell you why. Um, I don't think there's an appetite to oust the Theresa May, not
Yeah,
right now. I think there's a lot of that could very well happen maybe later on, but even if she is ousted, I don't see a massive reaction on cable, and the reason is because of the 15th of December when Parliament decides, and that is going to be, in my eyes, a no. And after that, that's when things get really tasty for me. That's all this like leadership stuff. Oh, is it going to be Theresa May? Is it going to be Boris Johnson? Nobody. I don't care. You think we've got some moves now? The
yeah.
general election, you're going to get moves, right? Second referendum, right? Where do you think cable's going to be, right? A no deal. That's right. Renegotiate. That's going to be. Oh my god.
I mean,
Those are
to
the
be
moves.
honest, I listened to Juncker today and Tusk, and the message was clear because they repeated it about 25 times. There is no other deal. Um, so it's 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 a political union, as we said so many times. Um, I actually think there is no other deal. Um, and I'd be just, the one thing I would say in terms of, so Rees-Mogg failed to rally the troops for the 48 letters, so that's gone. Yes, he can come back, but you know what? It seems some that were so enthusiastically wanted to oust Theresa May suddenly either didn't send their letters even though they said they did.
Yeah.
So on the other hand is the public. So the public opinion has slightly changed in favor of May. The public suddenly started to realize, you know what? It's actually not May's fault. She was given a job, a near impossible task. B, her resilience of just
Mm.
like in the trenches, day in, day out, day in, day out. And to be honest, she even had some impact on me because I never really, I didn't have the highest thoughts of her. But actually, I have to admit, good on her, the way, whether it's right or wrong, who knows. But the way she actually
Yeah.
goes about to try to deliver what she was asked to deliver, yes, it's not perfect. Was there ever a chance it to be perfect? No, never was a chance, ever. We knew that because the Brussels cannot let, create a deal where suddenly Italy goes, oh yeah, I like that deal. Oh, let's go as well. Like we knew that. And who did believe and different, like someone like Boris Johnson, who usually is a very intelligent man. I think he was very, I don't know, close to stupid in that regards to actually think that common sense has anything to do in these negotiations. So now
Mm.
you have all these MPs that have their constituencies, they don't want to screw up people. So if people suddenly are like 52, 53% behind Theresa May, is the MP actually really going to vote no to create that disaster? And she plays it not so badly, saying, you know what, I want Parliament behind me because jobs are at stake, which they are, right?
Yeah.
And it's all good and, being in the press and do a little bit of this. When it comes to actually doing your job as an MP and go like, okay, what is really best for the country? Yes, we know it's not an ideal deal, but the no deal. And then we have Labour, which says they will not support the no deal. So, so we vote no, and then we have like these big movements in Parliament, Labour, and you're gonna find enough people that are not gonna allow a no deal Brexit. So I don't know where we are, right? So I would not be surprised, and I know I got slacked off on LinkedIn by someone the other day, which called me very shallow comments, and that I did write like I write for the City AM. Yeah, it was quite funny.
Really? Who was that?
Then I made a comment to him and said, you're calling for 100 cable now, but if you go back to your post, you did make the same call in 2016, and then he removed me from his. Then he removed me and removed the post, so I didn't like that too much.
That was really grown up.
Huh?
That was really grown up of him.
Yeah, exactly. No, but I think our job is to try. To be honest, we can't call it. I mean, we're not any, but there is just this slight change now versus 2-3 weeks ago in the public. And if the MP think they are the representative of the public, then I'm not sure if suddenly the certain guys that thought like they're going to vote no are actually taking the responsibility and say, you know what, we cannot let the country, lead it down to a path that we just don't know anything about it, which is a no deal Brexit. And so 2 weeks ago they said she's 50 votes short. I don't think she's 50 votes short anymore.
Yeah.
But it's tough. It's going to be a tough call. And what it means, I really don't. Well, Sterling is going to sell off, obviously, on a no. And we go into uncharted territory because we've never been in a situation where we don't know what's next. We really don't, right?
Yeah.
And all I would suggest to everyone is you can't fade Sterling if Sterling drops on the back of a no vote in Parliament, because we just don't know.
No.
I will not be anywhere near Sterling, to be honest.
Don't worry, B. I'll trade Sterling for you.
Good. Good. I think Kiwi just dropped like a stone there on some weak retail sales. Just yeah. So yeah, I don't know. To be honest, the date, even though it was once said to be 15th of December, I don't think it is official yet. They sort of talk about 2-3 weeks, which is about 15. But I don't think the date is official yet. But it should be there about anyway, the next 3 weeks anyway.
Should be there. Okay, mate. Well, look, I think that's brilliant, and thanks a lot for coming on the show today. And there's a lot to go. If you have any questions, just ping me on LinkedIn or Beat. But a couple of things to tell you about. We've got a new product. It's a one-day masterclass. It's launched on the 23rd of March 2019. If you want to know more, it's basically for absolute beginners or people that have been trading less than 3 years. You just want the bare bones, but the basics to really get you match fit to trade properly. And we'll give you setups. And if you look on my feed, all of the details are on there. And if not, I'm happy to talk you through it and send you all the details along with everything else. Beat should be coming onto that one as well, so that should be really, really exciting. And Beat, you've got an amazing commentary. So tell me a bit more about that.
Yeah, to be honest, what I do every morning is just a sort of core. I do the charts of the core currencies, give a bit of flavor of the day, talk a bit what the news is and how I read the news and what I expect from the sort of day a week. I write my own piece, my 2 cents, where I try to make sense, basically what we sort of talk now, whatever new comes along, if there's something that I think is sort of changing my mind, I write about it and send it out. So whoever is interested, get in touch with me or with Patrick, and we can talk more about it.
That's fantastic news. So that's it from me. Is there anything else you want to say, Beat?
I think we covered it all.
We did. We put the world to rights. Good luck. We're about to open in Asia. Good luck. What's that risk? And we'll be making market commentary throughout the week, of course. And otherwise, see you next week. Take care.
See you, Patrick. Thanks very much. Have a good
Cheers.
week. See you. Bye.